So the logical trade is you keep trading the weaker thing to buy the stronger thing. And MicroStrategy's done it with hundreds of millions of cash, with billions of dollars of equity, and with billions of dollars of debt. And we'll continue to acquire Bitcoin, and we'll sell products to get cash for Bitcoin. Maybe from time to time we'll sell some equity instrument or some security instrument.
At the Bitcoin Atlantis conference in Mauritius and Bitcoin Prague in June, MicroStrategy founder and executive chairman Michael Saylor proudly declared that Bitcoin had entered a decade-long gold rush era in which multi-trillion-dollar firms like Microsoft and Apple will invest in the leading digital asset to avoid fiat debasement. Saylor believes the Bitcoin gold rush began in January after the U.S. Securities and Exchange Commission (CCC) approved 3 spot Bitcoin ETFs, allowing thousands of institutional investors to buy in the largest cryptocurrency by market cap. Saylor expects thousands of hedge funds, pension funds, sovereign wealth funds, country states, and even MicroStrategies will buy Bitcoin directly or through spot Bitcoin ETFs till 2034. Saylor calls the introduction of spot Bitcoin ETFs a game changer that changed the Bitcoin regulatory environment. The SEC's greenlight was a crucial step in dispelling Bitcoin's misconceptions as a magic internet money or a money laundering scheme. Major Wall Street players like Fidelity and BlackRock further cement Bitcoin's position, indicating that it's not a passing trend but a long-term investment opportunity in this gold rush era. The MicroStrategy executive chairman predicts that the final piece will fall in place in all categories. Bitcoin Saylor believes that when this happens, Bitcoin will rapidly begin to assume its true value until its market cap is someday worth hundreds of trillions of dollars. In a recent interview with Bitcoin News, the renowned billionaire business executive discusses extremely bullish Bitcoin predictions.
Bitcoin is digital capital. And so once you understand capital is a store of value, it's economic energy. If I can store capital in digital form and I can move it between any of billions of computers or any of millions of companies, if I can move it at any frequency, if I can program it using the most sophisticated servers, if AIs can trade Bitcoin with each other, when a billion AIs are trading with each other, they're not going to be trading buildings with each other. They're not going to be trading copper tokens or gold bars. They're not going to want to trade Apple or Amazon stock with each other. They're going to want to trade digital capital with each other. They're going to want to trade Bitcoin. And Bitcoin is, because it's digital, and because it's deflationary, it's got a half-life of forever, right? It's permanent, immortal capital. So when you think of it that way, you think, well, what do I want to own? Well, I want to own perfect capital, perfect money. And if you look at it statistically, right, Bitcoin has been, for the last 4 years, it's returning 4 to 5x as much as the S&P index. And it's been 4 to 5x as volatile. And the reason it's volatile is because it's a free capital market. It's a global capital market, and anybody can express any sentiment anywhere in the world, any second of the day, as frequently as they like. And the reason it's high performance is because of its technical characteristics. So what'll happen? Over the course of 20 or 30 years, Bitcoin will start to be just twice as good as everything else. Bitcoin's 5 times as good as the next best thing right now, but maybe one day in 20 years or 30 years when Bitcoin is the size of the S&P 500, maybe it'll only be twice as good. But it's always going to be better because it's pure digital. It doesn't have the physical liabilities of physical real estate or physical property. It doesn't have the cultural liabilities of art. It doesn't have the corporate liabilities of equity. And it doesn't have the political liabilities of currency. And it doesn't have the credit risk of debt. So you're buying Bitcoin, you're buying the best thing. When should you buy something else? When something else is better, you should buy something else. But there isn't anything better. There isn't anything better now. There won't be anything better in the future. So the logical trade is you keep trading the weaker thing to buy the stronger thing. And MicroStrategy's done it with hundreds of millions of cash, with billions of dollars of equity, and with billions of dollars of debt. And we'll continue to acquire Bitcoin, and we'll sell products to get cash for Bitcoin. Maybe from time to time we'll sell some equity instrument or some security instrument. But there's no reason to ever stop that strategy, because Bitcoin's just going to continue to be the best thing. It's just a question of, is it 10 times better than the next best thing, or 5 times better, or 2 times better? But of course, those don't really matter, right? The directional answer is the same regardless.
A long-awaited victory for Bitcoin and the cryptocurrency and digital assets industry as a whole is the Financial Accounting Standards Board's FASB rule change. With this change, companies that hold Bitcoin and other cryptocurrencies on their balance sheets can finally use fair value accounting principles when reporting their crypto asset holdings. According to the founder and former CEO of MicroStrategy, before the rule change, the board saw Bitcoin as an indefinite intangible asset and generally treated it like a scary exotic asset that it wanted to keep companies from buying. This is exactly why many chief financial officers had trouble allocating enough funds to the leading crypto asset, even though it had many great qualities. Now that the rules have changed, companies can report gains and losses on their crypto holdings as separate from their operating losses and gains. This means that company executives can freely invest in Bitcoin, knowing that the rule change will keep the volatility away from their core business. This is why Saylor is sure that many more companies and institutional investors will continue to buy Bitcoin before its price completely explodes. Here are some more clips from the interview.
Coin, and it clicks in your mind, your immediate reaction is, oh, I gotta hurry and buy as much as I can because someone else is gonna go take all my Bitcoin away from me. So like in 2020, when I started buying Bitcoin, I was thinking, oh no, I gotta do this in a hurry because someone's gonna figure it out and the price is gonna 10x. And I better get it before it 10x's. So, I mean, that's a natural reaction when it finally clicks in your head, because you're thinking, why wouldn't every billionaire in the world go and buy $1 billion of Bitcoin, smash buy it overnight, and just to make $1 billion? Because why wouldn't they just want to make the $1 billion, or 5 billion or 10 billion or any amount of money? I mean, Bitcoin, it feels like in the early days the infinite money glitch, right? But the practical case is the world falls into conventional patterns and conventional behaviors and ceremony and ritual. And there are a lot of forces of conservatism that cause institutions and companies to move slower. So for example, in the last 4 years, one question is, will Bitcoin be embraced by the regulators? And that wasn't really clearly answered until January of 2024. So when the United States SEC approved the Bitcoin spot ETFs, that was a major endorsement that this is not tulip bulbs, this is not a scam, this is a legitimate institutional digital asset and digital commodity. So that was a very important point. Another thing that had to happen for corporate adoption is fair value accounting. If you bought $1 million of Apple stock and it doubled, you would have $1 million investment gain. But if you bought $1 million of Bitcoin under the previous indefinite intangible accounting and it doubled, you would probably be showing a loss. So a CFO that's indifferent, if they said, well, wait, I can buy this, and if it doubles, I'll make money, and if I buy that and it doubles, it'll look like I lost money. That was, I would say, prejudicial, hostile accounting. And that only just changed this year. And then the third thing that is required for institutional adoption in a big way is for the banking system of the world to start custodying Bitcoin, right? If I'm Google and I generate $1 billion a month, or maybe $1 billion a week some weeks, I have no problem wiring that money to JP Morgan or Citigroup and saying buy government T-bills and A junior employee at Google does that wire transfer, and it's routine like this. But if I wanted to buy $1 billion of Bitcoin, I can't wire the money to JP Morgan or Goldman Sachs or Bank of America or Wells Fargo. I have to go find a new relationship. I have to set up a new vendor, right? And a lot of times these companies had the same bank for 20 years.
Also, on Monday, the U.S. Securities and Exchange Commission approved 9 spot Ethereum ETF applications. This is a big step forward for the cryptocurrency industry as it continues to spread into the mainstream finance industry. Coinbase wrote for investors in a tweet to celebrate the success. Spot Ethereum ETFs give investors access to a unique cryptocurrency asset with its own set of return traits. Ethereum's ecosystem is strong, with more than 15 million monthly active addresses, and it's growing quickly, with 300% growth in smart contracts deployed in 2023. On the same day, U.S. spot Bitcoin ETFs attracted 533.577,002.43.2 Bitcoin worth $22.3 billion, and Fidelity's FBTC has about 0.68 N.3 Bitcoin worth $12 billion at the moment. Prices for both Ethereum and Bitcoin are expected to go up even more this week as more institutional investors join the trend. Please leave your thoughts, comments, and observations below. Also, make sure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for showing up.